So let us see some major brands of credit cards. You're all aware of the Visa, MasterCard, American Express. These are the major brands of credit cards. Now please note that bank is the card issuer. Visa, MasterCard are not the card issuers. We'll clarify this point very shortly. Then you might have also known about add-on cards. Add-on cards are like additional cards. Usually there will be a primary card holder, say the father in a family. Bank will also offer additional cards to spouse, children, like parents. And all the expenses on that card, the add-on cards, will be billed to the primary account holder. Of course, there will be some fees for this. Then let us understand what is chip card. Earlier they used to be magnetic stripe cards, okay, but now all cards are chip cards. So a chip card contains a microchip that contains all the card holder information, but it is encrypted, right? So this is important from security point of view. So for these cards, it's difficult to do frauds or clone the cards, duplication of the cards. And also there will be an external layer of security in form of 4-digit PIN to be entered. Usually banks will not give you at the time of issuing the cards. They won't issue the card and PIN together because that is risky. In case they fall in the wrong hands, they'll be having access to both the card and the PIN. So that's why they'll send it separately. But besides chip technology, if you see a card, you also have a magnetic stripe at the back, a black band. That is a traditional magnetic stripe. This is useful because if there are some merchant outlets who have not yet upgraded to the chip enabled terminal, so still you can use your traditional still you can use a card at the traditional POS terminals. So this is how the two POS terminals looks like. This is dipping. So in case of chip cards, we don't swipe it. There is no concept of swiping here. We just dip the card so that the terminal will read the contents in the chip. Earlier we used to swipe the card. That is for the magnetic strip. Okay. So let us see how credit cards work. This is very important from an interview point of view. Now Visa and MasterCard are international settlement and clearing houses. Let us see why they are required. Say there are two banks in the picture. Okay, one is a customer who shops. You as a customer who shops, you'll be having your own bank. Say you're a customer of SBI. Now that merchant, say you went to a particular shopping mall, say Spencer's. That shopping mall will be having his own bank. Say he's using the card swiping machine, that POS terminal is provided by a bank, say ICICI Bank. Now, if you think about it carefully, the shopkeeper should also have SBI machine to process your transaction. Because who knows? It's only SBI who knows what is the balance in your account. Okay, whether your card is blocked or not, whether you're a customer of the bank. Who has all these details? Only SBI has. See, ICICI Bank machine will not have all your information, right? So that shopkeeper has to keep an SBI machine, POS terminal, in order to process a transaction. Okay, is that clear? ICICI Bank doesn't have this transaction because you are not their customer. So in principle, the shop should have POS terminal as SBI, but you are not their only customer. There are other customers also. So I am a customer. Say my banker is say Punjab National Bank. So again, the shopkeeper has to maintain a POS terminal of Punjab National Bank. Otherwise, my details won't be available to the POS of other machines. This is inconvenient and expensive. The shopkeeper has to maintain POS machines of all banks, SBI, PNB, Canara Bank, HDFC Bank. That is very expensive. Instead, what they do is, there are something called settlement networks. So Visa and MasterCards are settlement networks. Now, the shops need not have POS machines of different banks. All they need to have is a machine that works on the network of Visa or MasterCard. So any bank, whichever it might be, whose credit cards are endorsed by Visa or MasterCard, those cards the shop can accept. Of course, they charge fees from the shops. So this is the process. The process, what actually happens when you do a transaction. We can split it into two phases. One at the time of shopping and two the actual payment process. The steps during shopping time will be like this. Initially, you go to a merchant, there's a shopkeeper, and you shop, say the Spencer Mall, you've done a shopping. Then the transaction through the POS terminal, the information will be sent to the acquirer. Okay, acquirer means this is the bank of the merchant, say ICICI Bank. The shopkeeper has a POS terminal. That terminal belongs to ICICI Bank. He's known as the acquirer. Okay, So ICICI Bank will do the authentication of the transaction, but it doesn't have your details, right? You're not the customer. So what it does, it contacts Visa or MasterCard. So that the transaction details are sent to Visa or MasterCards. Visa or MasterCards will send these details to your bank, that is SBI. So that is the card issuing bank. Now SBI can verify. Say you have done a transaction of 5,000. Your card limit is 50,000. Your balance is already 49,000. Now it doesn't have. You don't have the limit to do this transaction, so it might reject. Or if the transaction is within the limit, it will allow. Or somebody else is using a card. You already informed the bank to block your card. So these decisions will be taken at the card issuing bank. If it clears the transaction, it says it's okay and sends the green signal back to the Visa and MasterCard. So Visa and MasterCard will be informed of the decision, and then they'll transfer the information back to the merchant, and the merchant will hand over the shop goods to the customer, and the transaction is completed. This is what happens during the shopping time. What happens during settlement of funds? The settlement of funds, that is usually done at periodic intervals. The merchant will submit the transaction slip to his bank, that is ICICI Bank. So these are all the transaction slips. These are all the transactions that were done in my shop using a machine. So the merchant will credit the amount to the merchant account. So total 2 lakhs transactions were done. 2 lakh amount the ICICI Bank will credit to the account of the merchant. Now ICICI Bank will submit these details to Visa or MasterCard. What Visa or MasterCard will do is they'll do settlement. That is, they'll debit SBI account and create ICICI Bank account for your particular transaction. Right? Now since SBI account is debited, it has to recover it from you. This we discussed. It will give some 20 days grace period. Right? So statement will be sent to you and it will recover money from you. So ultimately you will pay the amount back to the bank. So this is the process. You should also understand that Visa and MasterCard will not do this individually for every transaction. For example, at 10:30 AM, say SBI cardholder used Axis Bank POS at a mall. So what should happen theoretically at the end of this transaction? Visa should debit SBI account and credit Axis Bank account. Right? Note that all banks have their respective accounts with Visa and MasterCard. Then say at 11 AM, an Axis Bank cardholder shopped at a mall using SBI POS. Now what Visa should do? They should debit Axis Bank account and credit SBI account. Now if they keep doing like this, there will be a lot of transactions and it will be very inconvenient. So what they do is, at the end of the day, they do a settlement. That is, they net off all the transactions. All the debits and credits will be netted, and whichever bank has to pay more, that will be cleared. So that is known as settlement. This concept will again come across at the time of check settlement, check clearing. That we'll discuss when we discuss about checks. You also should be very clear that the card issuers are not Visa or MasterCard. They're just credit card brands. They don't issue cards. Banks issue credit cards. Visa and MasterCards they just provide the settlement mechanism and they receive fee. They are nowhere concerned how much interest should be charged to the customers or the fees or the reward points. Everything will be done by the banks. Okay. Now Visa and MasterCards are competitors, so they will compete with each other. So what they do, they offer various perks to merchants. That's how they improve their business. Also, American Express is also another brand of credit cards, but they're not as widely accepted as Visa and MasterCard. So what are the questions that you have to be prepared in this chapter? What is a credit card? On what basis is the limit of a credit card decided? Usually it's decided based on primarily the salary of the cardholder and past payment history. What is the advantage of credit card to customers we discussed? What should you do if you lose your card? You should immediately inform the bank and get it blocked. What are some perks offered by credit cards? What are some tie-ups banks have for credit card customers? This we discussed. Shops, airlines, hotels. Can you draw cash using credit card or debit card or both? We can use both to draw the cash from ATMs. But which is cheaper? Withdrawing cash by debit card or credit card is only by debit card. Credit card charges are higher, 2 to 3%. What are some disadvantages of credit cards? We discuss how interest is calculated. We discuss this. What is the typical rate of interest charged on credit cards per month? It's around 2.5%, 2.5, 3%. So this is per month, okay? So per year it works around to 36%. What is minimum amount due? We discuss. What is rolling amount? We discuss. What is grace period? What is late payment fee? What is annual fee? What is the advantage of credit cards to banks? We discussed. Banks receive a lot of fees and interest from the credit card holders. I shop huge amounts using my credit card, but I always pay the entire outstanding within grace period. So I am never charged interest. So bank doesn't get any income from me. True or false? No. Bank will, if you do a lot of shopping, the shopping malls where you do the shopping, those will be charged. The merchants will be charged for every transaction, say 2.5%. So bank will earn income from them. So you are not a loss to the bank. Okay? You're still contributing to the income of the bank. What does POS stand for? What is the POS machine? We discussed. How banks get benefited from POS? We discussed. What is PIN? How many digits are there? Do you have to sign one chip enable card? It's not required. Why small shops request you to pay by cash even though they have POS machine? Because they have to pay fees to the banks. Okay? To reduce that, they request you to pay by cash. What amounts do banks typically charge from shopkeepers? That's around 2.5%. Name some major brands of credit cards we discussed. What are add-on cards we discussed? Into whose accounts are expenses incurred by add-on card bill to the primary card holder? What is the advantage? Chip technology card is more secure because the information is stored in an encrypted manner. Why banks send PIN separately to a mailing address and not together with a credit card? Because if both are sent together and if they fall into wrong hands, they can use the card for fraudulent purposes. Besides chip technology, why most cards continue why do they still have the traditional magnetic type? Because some shops might not have upgraded to the chip enabled POS. So there you can also use your card normally using the magnetic type. Explain how credit cards work. Explain the process of credit card operation, network, payment, settlement. All this is discussed. What are the steps that happen behind the scene when the credit card shopping takes place? What are the steps that happen behind the scene when the credit card payment takes place? All this is discussed. What is Visa, MasterCard? Those are the major brands of credit cards.